Hello, everybody. My name is Alesh Eisner, and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. I received a question from Danny who's asking, can you tell us specifically which growth mutual funds you hold, and also how to research mutual funds? Thanks. So, first of all, I am going to show you in a second what mutual funds I own. I definitely suggest you do your own research. The funds are specific to a person, and what I have is not necessarily right for you, so I am not recommending anything. I am just giving you examples. What should drive the type of funds that you own are the type of risk that you're able to bear, both psychologically, as you see volatility in the markets, as we are seeing now in late 2022, as well as what you can actually bear in terms of your pocketbook, and do you need the money today to live on. The second aspect of what types of mutual funds you should be in is your time frame. You will be in something that can be more volatile if you have a 10-year or more time frame, while you should be in something less risky if you have a shorter time frame. And then the third major aspect is, what sort of a return do you need? Do you need 5% a year, or do you need 15% a year? And I'm going to show you the funds now. Let me just say there is nothing magical about my mutual funds specifically. You can easily find these on Morningstar yourself, and I will show you how. So the first one is from my corporate account. Uh, all but one are from the company Mauer. Again, I'm not suggesting them. I'm just saying it's a company that I use. And the one at the top is a global equity fund from a different company. The one at the very bottom, even though it doesn't say MAW at the front of the ticker, it is a Manulife fund, which is managed by our friends at Mauer, so they're still good. And the second screen you're seeing here happens to be my RRSP, uh, different mutual funds, but still using Mauer. What I will show you on morningstar.ca is how the star rating system works. And as you can see on both of my accounts, I have chosen 5-star mutual funds, and 5 stars is the best. So, what 5 stars means is that they are in the top 10% of the performance of the mutual funds in the same category as this fund. And I will explain what that means in the next screen. If you know the 3-letter and 3-digit ticker symbol for your mutual fund, or if you want to research your own mutual funds, you can easily do that by looking in the upper left of the morningstar.ca website for the search and enter the ticker in there, and you can find your fund. If you are wanting to find the same 5-star funds that outperform 90% of their compatriots, you can go to the fund tab and then click the 5-star search button as I'm showing you here. Let me also give a little bit of information about how I use mutual funds. I use mutual funds for growth in my portfolio. And so they are going to be either a blend of value and growth, or they are going to be exclusively growth. Uh, I like somebody else to take care of that aspect because I'm more of a value investor looking for dividends and stability, but I want to have parts of my portfolio growing without necessarily paying any dividends. So this all depends on what you are looking for from your portfolio. So here I've brought up one of the mutual funds that I own, which is Mauer Global Small Cap. A is the series at the top, and it only has one series for this particular mutual fund. A little bit of a head scratcher is that this one seems to be a 4-star fund in Morningstar, while it's still showing as a 5-star fund in my Qtrade account, as I showed you earlier. I'm not sure whether that's just a delay in updating. The rating is gold as far as management goes, however. So on the front page, I'm just going to go over the things that you can see on here and tell you a little bit about each one and why it's important. So the NAV is basically the share price. Bigger or smaller NAV doesn't really matter. It's the trend and hopefully upwards that is important. Next, we have investment size. It is 2.9 billion, so that's the size of the mutual fund, or how many dollars people invested into this mutual fund. Once you go past, let's say, 10 billion, the fund becomes a little unwieldy, so you don't really want to invest in something that's that large, and a lot of mutual fund companies will stop accepting further dollars into a mutual fund that grows past a certain size, because it becomes sort of like a cruise ship. It becomes difficult to churn. It becomes difficult for them to buy investments that they want to buy without driving up their prices just because of the amount of money that they have. TTM yield stands for 12 months trailing yield, and this one is 0, so it's not really paying any dividends. So that's an indication that it's a growth mutual fund rather than a value one. Next, we have MER, which stands for Management Expense Ratio. That is the fee that the mutual fund company charges the investor every year on the amount invested. Note that all of the statistics and graphs that you see afterwards are after the MER has already come off, so they're net of the MER. Share class type is an indication of the commissions that this will be paying to any advisors. This is a do-it-yourself, so that means that if you have a financial advisor that purchases this fund for you, they will not be getting any commissions. So this would typically be used by somebody who runs their own discount brokerage account and can purchase this. Usually for a financial advisor mutual fund, you'll see commission-based or fee-based. Minimum initial investment is $500, so you need $500 in an account in all of the Mauer funds. So you could have $300 in one Mauer fund and $300 in another Mauer fund, and that would qualify this requirement. This has actually come down. I'm assuming it's accurate because it used to be 5,000. Now, going down and to the left, we have the category. So Canada Fund is 2 words that you'll see on all of these. The important part is what comes after. So it's a global small / mid-cap equity. So global means worldwide, including Canada, including US, and including the rest of the world. Small and mid-cap will generally mean the size of the company, so it won't hold Amazon or Apple. Those would be considered mega caps. So we'll hold something that has, let's say, under $10 billion in capitalization. Next is an important grid that gives you an idea, the investment style. So it has 2 dimensions. Up and down is large, medium, and small. And you can see this one is small. And left and right, we would have value, blend, and growth is on the right. This one is indicating to be a blend. So they can buy basically anything, but in the small size. Turnover is for the stocks that this mutual fund holds. what percentage of those stocks are switched out and then different ones switched in on a given year. So this mutual fund on the average will cycle through its stocks holdings in about 3 years. Risk level, you generally have low, low to medium, medium, medium to high, and high. You kind of have those 5 risk levels. This one is on the higher side, so it's medium to high because it is all stock. And then we have inception date, which is when the mutual fund came into being. So this one has a good enough record. And status is open, meaning it's accepting additional purchases from investors. Next, if you are a visual person, you can use this chart. The 3 colors that we have is the blue is the investment, the mutual fund that we're looking at. Category is mutual funds that are of the same category, meaning global small / mid cap equity. And red is the index. So both this mutual fund and the other category mutual funds, their performance is shown here after the fees have come off, after the management expense ratio has come off. The index in red doesn't have any fees associated with it. So it really has a bit of a leg up to begin with. And an index is basically just a formula. There's literally thousands of indexes out there, and it is used as a benchmark to compare investments to. And we have a little other thing on the left is the manager change. So the stock picking for a mutual fund is being done by a portfolio manager. If a portfolio manager leaves, whether the company or goes to a different mutual fund within the same company, that could have an impact on the performance. And so it is indicated on these charts. This one looks like it had a couple of partial management changes. So usually the portfolio managers work as a team. There might be 2 or 3 leads, and then you'll have a bunch of analysts. So with the partial, it would have been one of the managers having left. And the main thing that you should get from this chart is that the blue, this mutual fund, has outperformed its index, definitely. So it would also outperform any exchange traded funds following this index. And it has very easily outperformed other mutual funds in this same category, as has the index, as you can see. Just lately, you can see that the mutual fund has had a bit of a sharper fall than the index has, but it is still significantly above the index and definitely above other mutual funds in the same category. So that is what you're looking for, is for your mutual fund, the blue, to be on the top of the other lines. If you are more of a numbers person, you can certainly go and have a look at the tables, which are underneath the visual diagram. And there you get the performance of the investment, the mutual funds in the category, and the index sliced and diced in different ways. You can see the performance by the year. And just as an example, taking 2012, the mutual fund we're looking at did 29%, while the other mutual funds did 5% that year, and the index did 15%. You can also see in terms of quartiles how it has performed. You can see that it is at the top quartile or near the top for the majority of the years, which is what we're looking at. You can also get the percentile rank. So in 2012, it was number 4 if there were 100 mutual funds in that category. But on the line below, you can see that there were 114, so it could have been 4th or 5th, let's say. Now, more interesting is the table further down where you can see how it's done over a certain period. The data is still in the annual return. So over a 10-year period, and I look for mutual funds that have at least a 10-year period behind them, if not 15. So over a 10-year period, the investment has done 11.59% per year. Other mutual funds in the same category have done significantly worse, 7%, and the index has done 11. So over a 10-year period, the mutual fund has still beaten the index and definitely its compatriots. So you can again see the quartile rank. Was it the top quartile, second, third, or fourth? Over the 10-year period, it was in the top 14% of the mutual funds in that same category. Obviously, the longer we go, there's fewer mutual funds that were still in existence for that length of time. So you can see that the number of investments in the category sort of comes down the further back we go in time. So this is the sort of performance that we're looking for in our mutual funds. Next, for the sake of completeness, I wanted to show you a balanced mutual fund. So a balanced mutual fund is a fund that has both stocks and bonds in it. You can also purchase a mutual fund that has only bonds in it. So the top is pretty much the same with one exception. You have a credit quality / interest rate sensitivity box. And what that shows you on the up and down axis, you have the credit quality. So the Mauer Balanced Mutual Fund has medium bonds in it. That box applies only to bonds. So the high credit quality would be government bonds, where there's very little risk but also lower interest rate being paid. Medium would be big corporations that put out bonds. So there is some chance that you won't get your principal back, but you get compensated by getting paid a little bit more interest. And then low quality would be junk bonds of smaller corporations that could go badly. Interest rate sensitivity is on the left and right axis. You can see this one is on the right-hand side, so it's extensive. And what that means is bonds get affected by changes in interest rates. If interest rates are going down, the bond value improves. Once interest rates start going up, like we've been seeing in 2022, then the value of the bond itself goes down. So you can actually have capital losses. And the longer term the bonds are, so you can have a 5, 10, 20, 30-year bond. The longer the term of the bond is, the more payments there are for it to get paid less on compared to new bonds, and therefore the bigger the hit is going to be to the value of the bond. And so this one, because it says extensive, I would be assuming has longer term bonds, and I'll show that to you in a second. So that box is new for any balanced or bond funds. On this tab, you can see we're in the portfolio tab on the top. You can see asset allocation, and so it shows you what percentage it has in Canadian equity, US equity, and international equity. And fixed income is the bonds. So this one is basically 60 something percent in stocks, 30% in bonds, and then cash and other types of investments make up another 10%, give or take. And you can see to the right of that is the fixed income style. And you can see the effective duration. And this mutual fund is using 6-year bonds. And you can see the category average is 4 years. So this is why it would have a higher interest rate sensitivity, because the bonds are longer term. And as interest rates go up and new bonds come out that are paying higher interest because of the interest rates haven't gone up, the current bonds, which let's say this mutual fund owns, need to be taking a capital loss and need to be discounted. Uh, and of course, the more years the bond is in effect, the higher the discount. So that's where that's coming from. On the lower left, you have exposure, where you have the percentages as far as where are the bonds. And you can see that it is 44% in government bonds, so pretty safe. Corporate bonds being probably fairly safe, depending on what they are. And you can see that the government is about 10% higher than what the category would be. And to the right of that, you have the bond ratings. Anything in the A's is definitely investment grade, including triple B, I believe. Once you get below that, then it becomes speculative. And you can see that these bonds are on the higher side of the quality, and that's why the credit quality in the box up above is medium. If there were more AAAs, then the box for the credit quality would indicate probably the high side of credit quality. So this screen again is applicable for bond mutual funds or for balance funds. And how you would get there is beside the portfolio heading, you have equity and bond, and I flipped it to bond in order for us to see the bond information. Before we conclude, let me go back to the search screen in Morningstar and show you the expanded search screen. So make sure you have either 4 or 5 star rating in the rating category, but also 2 fields below it is Morningstar category. So there you can choose where the mutual fund is investing. And down at the very bottom, if you expand the search parameters, you have the equity style box and you have the fixed income style box. So this is where you can select which of the squares you would want your mutual fund to be involved, both in the equities and stocks and in the fixed income, meaning bonds, now that you understand what the 2 dimensions of each of the boxes are. So that concludes my walkthrough of the mutual funds and what my process is to select them. Please, again, do your own research. This is very particular to each person, and it depends on what you want your portfolio to do for you. And that will determine what you choose as far as your investments, and also your risk profile, the return that you need, and when you need the money back, meaning the time frame. So I hope that all makes sense. If not, please ask me questions in the comments. And if you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.